Hi, welcome to this week's headlines. I'm Jason Lim and here are the highlights. Malaysian officials have confirmed that a part of the wing called the flaperon found on Réunion Island belongs to the missing MH370. Prime Minister Dato Sri Najib Razak verified the news at a press conference. However, investigators from France, the US and other countries have been more cautious, saying they require more time before verifying the discovery. US Secretary of State John Kerry is in town for the ASEAN Forum, discussing the continuing tensions out in the South China Sea. Kerry urged China to end its dispute with regional countries like the Philippines, Vietnam and Taiwan. Police have questioned 9 Malaysian Anti Corruption Commission officers in the past week over the alleged leaking of confidential bank documents related to 1MDB. The MACC is also without its 2 top officers. Its chief, Dato Muhammad Abu Qasim, took a week's leave while his number 2, Dato Shukri Abdul, is currently abroad on official duty. PDRM meanwhile denied interfering with MACC's ongoing investigation into the sovereign fund. And for our main story this week, what's happening to the ringgit? Let's find out whether it all makes sense. Exactly 1 year ago, $1 cost 3 ringgit 19 to buy. Today, I need to pay 3 ringgit 91 to get the same amount. That's roughly around 20% more. The ringgit also has the title of Asia's worst performing currency. What on earth is happening? Just think, if I had bought US dollars 1 year ago and sold it today, my returns would have been higher than the 6% or so that EPF can pay me. But seriously, the effects of a weak currency is quite severe, especially on a country that depends on imports. Just picture this. A 10 US dollar item used to cost 32 ringgit last year and now costs nearly 40 ringgit. Plus, the ringgit has also weakened against the pound, the Aussie dollar and the Sing dollar. And I can't imagine what it must be like to have a budget for an overseas education. Now, how did we get to this level in just 1 year? What are the factors behind this? We spoke with Christina Fong, an economist at RAM Ratings, and she tells us what led us to the ringgit's depreciation.
This year, the past 7 months have been very volatile for the ringgit, and as we can see, most of the movements have been sentiment-based movements and basically knee-jerk reactions to certain types of news and events that have been happening, both on the external and the domestic side. So, if any trend can be gotten from, what's been happening to the ringgit this year, it'd be that it's just highly volatile. So to date, I think year on year, the ringgit has lost about 19% compared to this time last year. So it's definitely been on a downtrend and highly volatile.
And indeed, there's been a lot of volatility. Essentially, there are at least 4 main factors that have affected the ringgit. First, the price of crude oil. They've fallen from levels of over 100 US dollars a barrel about a year ago to around 45 this week. If you look at the charts, you will see some correlation with the ringgit's weakness. The reason is that Malaysia's economy is very dependent on oil and gas, which is to say the Malaysian government's income is very dependent on how much dividend Petronas is able to pay it. Secondly, there's been talk for some time about the US Central Bank wanting to hike interest rates now that the economy seems to be improving over there. If interest rates do go up, the US dollar would then be more attractive currency to invest in. Hence the shift out of emerging market currencies, and that includes the ringgit and stocks on Bursa Malaysia. The Federal Reserve, meanwhile, is expected to make its decision sometime next month. Third, as for currency speculators, memories of 1997 Asian financial crisis are popping. During that time, a lot of speculators were betting on the ringgit weakening. We might be in a similar situation today since Bank Negara used moral suasion to ask traders not to sell the ringgit. But certainly we are nowhere near another financial crisis, at least not yet. Lastly, it's all about perception. Investors buy into something because they have faith in what they are acquiring. With the current political climate, can we really blame foreign investors for feeling a little nervous? These factors have an effect on Bank Negara's foreign exchange reserves. One of the main reasons for these funds is to allow the central bank to regulate the ringgit and smooth out any unwanted volatility. As and when necessary, Bank Negara will use these forex reserves to intervene by selling the US dollar for the ringgit. However, these reserves have been on the decline and are now at a 5-year low of just around 100 billion US dollars, which economists say is a concern. Obviously, those who will feel the pain of a weak ringgit are importers, and that includes those of you who do a lot of shopping online. Overseas holidays will be a lot more costly, and if you are planning to further your studies overseas, you may need to tighten your belt on a lot of things too. But companies that export their products, those who get their revenue in foreign currency, will be jumping for joy. We are talking about rubber glove makers, condom makers, and computer chip makers, just to name a few. So how? Are we going to need more than 4 ringgit to buy $1 soon? What's the prognosis? Well, Christina Fong tells us her best and worst case scenario.
In any sense, it's not to say a worst case, best case scenario, but it's just more of the view on where the level will settle. I think that at the moment we have a 370 to 380 average for the whole year. Today is 386, but in terms of the average value over the course of the year so far, it's around 360 something, 370, around that area. So I mean, for the rest of the year, given our forecasted average for the year, it should trend about 380 to 390 for the rest of the year. Even if it were to go past our expectations, it should only be a temporary sort of non-fundamentals-based knee-jerk reaction to whatever news or events that may be adverse to the exchange rate level.
Well, on the bright side, we are still somehow away from the all-time high of 471 to the dollar in 1998. During that time, the government imposed a fixed rate of 380 ringgit to the dollar. But will that happen again? Well, things are a lot different now, economically as well as politically. Well, let's just hope that things will get better. For now, I'm about to start a diet and cook at home, because that's one way of reducing my expenses. What are you going to do? Tell us on the comments below your financial tips to survive today's situation. Thanks for watching, and I'll see you next time.